to get that cough out of the way before we got going here. Good afternoon, everyone. We'll get going in just a couple of minutes.
I was going to say, in my neighborhood in Mansfield, all the houses were built in like 1938, and they're all very unique, but there's some of them that are really big and palatial and super awesome. And I always send the listings home to my friends in New York because I'm originally from New York, and say, look what you could get for 350,000, which in New York it would be like probably 800,000. I mean, they're gorgeous, big stairways, grand halls, and lots of windows. So yeah, built-ins. And they just say, but yeah, it's Mansfield, Ohio, Amy. So no.
I think I think I can positively say that I regret ever selling any home I've ever owned. Ever.
Right, because you could be
I wish
making
I
money
had
in
just
Airbnb.
yeah, I wish I had just held them. And I was told so many times, I'm in this business. I was told so many times, never sell property, just keep it. And I did it anyway. So
Well, like at some point in time. All right. Afternoon. I think we'll get going here. Good afternoon, everyone. This is the Last Week in Mortgage today. I am Faith Howard Mooney from TMC, and I have with me today Jeremy Davis, who is the president of mortgage at Southern Bancorp Bank.
hi there.
Thanks for joining me. I'm excited to have you, a new lender member, into our network. So he's a brave one, guys. He has been in our network, I think 2 months now, maybe, and you hopped on board and you're ready to do this with us. So we appreciate that.
Listen, I'm thrilled to be here. And I think I'm going to be the poster child of using TMC resources because I have literally had I think every demo from every partner company. And I've read more contracts in the last 60 days than I have in the last 10 years. So this is fun stuff here. I'm very happy to be speaking with you, Faith.
So there's a reason why you've been, listening to a lot of demos and signing a lot of contracts, because not only are you new to your position at Southern Bancorp, but mortgage is kind of like a new thing to Southern Bancorp. So you want to share with us a little bit about what you're doing over there?
Yeah, sure. So Southern Bancorp, for those that are not aware, we are a certified CDFI, Community Development Financial Institution. And for over 30 years, they've been providing wealth building resources to underserved communities. And we're headquartered in Arkansas. I am personally in Nashville, Tennessee. But the reason I am here today and in my role as president of mortgage with Southern Bancorp is we are expanding our retail mortgage capacity in our footprint, which is Arkansas, Mississippi, as well as several expansion markets that have already taken us with team members in Memphis, Tennessee, Nashville, Tennessee, which is where I live, Northwest Georgia, including Atlanta, and then Birmingham and Tuscaloosa, Alabama. So all of those contracts I've been reading have been LOS, POS, credit resources, every vendor service that you could possibly imagine. If I haven't talked to you already, I'm probably not going to because I can't read anymore. But it's been a super exciting time. What we do at Southern is really mission-driven work. So the Southern Bancorp Mortgage Division will focus on helping to bridge the homeownership gap for minority families in and around our footprint. It's a passion of mine and the team that I consider my wolf pack. Mortgage, we travel in wolf packs, but my wolf pack is equally passionate about this purpose, and we're having a good time building out infrastructure and getting prepared to launch ourselves into all of these markets that I just mentioned.
So happy for you, and you're surrounding yourself. I met one of your team members at MBA Annual in Philly. You're surrounding yourself with a really great group of people. We are very, very happy to have you within the TMC family for sure. Kind of led us into like a good first topic. So for those of you who didn't have the opportunity to be in Philadelphia, they have DEI awards at MBA Annual every year. And I'm so excited. I wanted to give a big shout out to a couple of people in our network who were recipients of those awards. So the Market Outreach Strategies Award for a company was given to Atlantic Bay Mortgage Group. And so, so excited. We've had great participation from Atlantic Bay in our network. So many people from the company are known within network. If there's anybody on here, we're clapping for you, happy for you.
We are. Congratulations, Atlantic Bay Mortgage. This is probably my favorite D&I award that MBA gives out, not only because I was fortunate enough to be a part of a team that received this award back in 2020, but the reason I love this award is it really is about this 360 view of developing outreach and marketing and products and programs that not only help the communities you're trying to serve, but they help your internal team understand why it's so important to have these outreach programs in place. So kudos, bravo to Atlantic Bay Mortgage Group. It's just so excited and happy for them. That the Smart Path program, I know you're going to talk a little bit about that, so I won't steal your thunder, but it's just super impressive.
Yeah, and so I did not know this term before, but a limited English proficient program, LaBadia. LaBadia, do I have that
La
right?
Bahia, La Bahia.
LaBadia, there you go. That sounds better. But yeah, and so that's part of, the Smart Path program is diverse consumer bases, meeting the needs of those that have Spanish as their first language.
Yeah. Yeah,
And so
it's really lovely, and again, it's based in education outreach. It's so important to make sure that companies, that all of us have this responsibility to be out in the streets with communities we're trying to serve and understanding where they're coming from. So again, bravo.
Yep. And so then also, in addition to that, for the Market Outreach Strategies Award for a non-lender member was iEmergent. And so many of you in network know Laird and Bernard Nasuli. They have been with us for a long time and have been working in, this segment of the industry. Laird's dad, who has to be like so proud in watching her from above. It has to be so proud of what she's done because she really carried on his mission from like well before this was ever a thing that you would try to do. And it's all about housing equality, housing equality for everyone. So big shout out to iEmergent as well. And then
big shout out. I agree, Faith. Big shout out to Laird and Bernard. This is a company that's been around for a little while now, doing amazing work, all based in data and knowledge. I always love to say, and I firmly believe, to help, we must first learn. And that enables us to show up for our communities. And what iEmergent has done and continues to do is giving us all of the capacity that we need to do exactly that. So proud of that.
Well said. Moving on to other things that happened there. MBA's forecast. Would love, this is an interactive thing. So people on here, whether you were there or not, and you've heard the forecast, we would love to hear like how you feel about this forecast, whether you feel, it's really what's going to happen. There's a lot of opinions out there right now. So Joel Kahn, who is the Deputy Chief Economist for the MBA, detailed at a secondary or at MBA annual that they really expected rates to decline, decreasing gradually, reaching the fives by 2025. That decline was projected to increase volume to 1.95 trillion in 2024, 2.25 trillion in 2025, which if you look at it from a percentage basis, that's 19%. The first year, bringing it up to, I think, 30% in total. Would love to know, for me, and where we're at right now with all of the unknowns, I felt like it was maybe optimism at its best. I don't know. Maybe I'm just not optimistic enough. Michael Kuntz, I'm glad I'm in good company. Yeah, I heard some things from other people while there too. What do you think, Jeremy? I know that
Yeah.
you're a growing entity yourself, but what do you think overall industry?
I do think it's highly optimistic, especially based on actual action being taken um, uh, at multiple levels. I think I can, as a mortgage guy, I can speak. I would love to see that come to fruition, but in my opinion, it just, first of all, 2025 is great, but that's still too far away. And unfortunately, the action that's been taken to mitigate inflation is really it's pile driving on the backs of the lowest among us. It is the least fortunate in our country that are paying the highest price for both inflation and these increased interest rates. Home affordability is not there, and this is affecting low to moderate income folks and communities of colors in much higher numbers than should be acceptable. And so I would say this is great. It's highly optimistic, but what are we doing right now to help with the pain? What are we doing right now to help with the targeting of our industry as a whole, almost as a singular focus of assisting with in battling back inflation? I really think it's time for us to come up with some more creative, action-oriented plans that can provide some more immediate relief. 2025 is a long way away for families who are struggling and who need to be able to purchase homes now.
There's a lot of things we were talking before we started this call. Sometimes our really great conversations happen before the call starts and gets recorded, but we were kind of talking about affordability in housing, in the neighborhoods that we live in, and what is affordable and what isn't, and the outrageous prices. I mean, in the community that I live in, you can't buy anything anymore that doesn't, the first number is a 5. And I'm in a under 2,000 square foot townhome. It's like the cost of everything is so outrageous to the point that it's really limited people have given up, I feel like, which I think is a sad statement for the world that we live in. And one of the things that we were talking about that kind of leads us into our next conversation, one of the things we were talking about is how all of these little things impact everything else. It's like, it's not a singular thing. There are multiple things that are giving impact. And so one of the things that's been in the news quite a bit is the ability to have an ADU on your property. So there were some things that happened which may help some people, but I'm not sure that they affect a large number of people, and I'm not sure they affect the right people.
Right.
But maybe they do. Again, maybe that's my sense of optimism has gone out the door a little bit. But Sarah Edelman, who we met with in June when we were in the DC area, announced that you can, at MBA Annual, announced that you can count 75% of your estimated ADU rental when evaluating a mortgage application. The environment I live in doesn't have a lot of ADUs. I know California is one place that does. I know there are some other places that do as well. So in this last week as well, Governor Gavin Newsom repealed an earlier ban on the sale of accessory dwelling units. So they're calling them mini condos. We need another term, we need another term.
As if most of our condos needed to have a classification of mini. I live in Nashville, and some of these 900 square foot places, they're getting smaller and smaller. So now we have minis.
Minis. Now we have minis, apparently. It's the new term for what do they call it? The small dwelling, they're the tiny home.
ADUs. Yeah,
Yeah,
tiny home.
homes. So they're calling them mini condos now. There are no specific rules, however. This is where when you
Yeah.
get into details, it's like when you dig into it a little bit, get into details. There are no specific rules on how to convert an ADU into a condo. That's going to be left up to every single municipality, which I just feel like when that happens, that's like disastrous, because then when you're trying to do a mortgage on that property and every municipality can make up the rules about what is done the right way, I mean, it has not only an impact on financing and who's going to, take that loan eventually, but then how are appraisers appraising those? I mean, they have to know the guidelines of every single municipality when they're looking at those.
They're going to have comps to appraise them.
What is a comp? Is a comp another ADU that has been converted into a condo and sold? And then what do you do in the beginning? Because appraisals are historical. So, I mean, it's raised all of these other flags when I started, thinking about this. The other thing is will local officials really participate? Because if they choose not to participate, then their municipality loses out. Or, is there enough stress or pressure to create housing that they would? I don't know.
Yeah, and are we really creating accessibility if especially in a state like California that's so huge, if every local municipality has to opt in, if you will, and then create their own rules? Again, we're talking about more time invested, more time to come up with the rules, more time to make the rules effective. And then you look at how much can this really help. I personally believe every little bit helps. You have to do what you can. But when you look at California, and I think you gave me some of this information before our call today, 10.6 million residential housing units in the state of California. But in the past 3 years, only 45,000 ADU permits were issued in California. That is just a fraction of a fraction of a fraction. So when we say every little bit helps, we are really talking about a little bit here. But also something that is just going to take so much time and so many hoops for local municipalities, appraisals, mortgage companies. You do wonder, will this help? And if so, when? At what point in the future does it make a difference?
Yeah. Yeah. I mean, that's when I started like breaking down the numbers from the top, and then you take out, okay, how many of those are going to not participate? I wondered if maybe, because it was very clear in stating that it was building permits that were applied for. And I do know, because my background was in appraisal, that you would run across units all the time that were not permitted. But then, then my mind went down the path of, well, maybe it's a way for counties to go to get more individuals to actually have permitted properties. But then there's a revenue upstream for the county or municipality on that one, however it works in California. But there's also an additional cost then related to the permits and related to what are the cost of permits in relation to if they're only going to rent that property? Then does that make rent more expensive for somebody to find housing? So my mind went down a number of those different paths.
Yeah, and in a state, and to just hang your hat on a positive note, in a state where there at least millions of housing units short of the current need, it's certainly great news that are not only are we seeing GSEs accepting of this, but we're seeing FHA underwriting now recognizing the need for this and anticipating using ADU rental income and qualification. So I think across the board, it's good news. It's just really hard to quantify when this good news is going to be helpful.
Yeah. When is the impact? When does it become impactful?
When does it become impactful?
Yeah, and who does it become impactful for? That was my other question. It's like, are we going to be servicing the right people in this? And I think, as we had talked about, it's like all of these little incremental incremental things that kind of all relate to each other, that are all impacting each other, kind of moves us into the next topic of conversation, which is rising debt.
Yes.
My opinion is I don't think that anybody should be surprised that debt is rising. I mean, we're in a different environment than what we were during the pandemic. People were getting additional, funds, surplus funds that has went away. The cost of goods and food and all of those other things hasn't really went down, and housing prices have increased. To me, that's the equation for.
I mean, this is like it's almost the perfect storm, right? I mean, housing expensive has skyrocketed, rents are skyrocketing, interest rates are so much higher. I mean, there is no surprise that in an environment where housing expenses are costing so much more than they were even just a few years ago, that consumer debt is rising and rising and rising. I mean, I think this is. I mean, we saw this coming a mile away when interest rates started going up. But even prior to that, during the pandemic, when there's just this massive increase of acceleration of equity in home ownership and home pricing, housing prices going up, rents going up. I feel like you got a little bit of a honeymoon period before what we see today, which is just rising debt across the board.
Yeah, the perfect storm, that term scares me a little bit, but it seems like every day that we go down this path, it seems like it is a little bit more that way. Kind of surprisingly, which I guess I shouldn't have been, but I didn't really think about it this way. The Sun Belt states are the places that are seeing the highest debt.
Mm-hmm.
And part of that is rising populations into those areas. A lot of people have decided, if I can work from anywhere, I'm going to work where the sun shines, right? And where it's rainy and cold outside, and we're in 50-degree weather already. So there's a study that's out there. It's the U.S. states most impacted by household debt in 2023. So Florida, Utah, Arizona, Colorado, Nevada have the most elevated mortgage and credit card burdens right now. And particularly the place that you don't want to see it the most, in lower income households.
Yeah. As we mentioned before, I think across the board in all this news, it's impossible to ignore the vast the vast proportion of what we are seeing is that low income families, they carry this burden in a way that none of the rest of our communities do. Communities of color carry this burden in a way that other communities just don't. So as we work through all of our action plans to try to help our industry come out of this and increase the ability and affordability of housing, we really need to be focused first on exactly what you just mentioned: low wealth households, low income households, communities of color. I mean, this is the future of our industry. And so if we don't take action there first, this is gonna drag on for many, many more years than we all want.
It's the future of our industry, and I feel pretty strongly it's like the future of our country. I mean, we have people that are like struggling to put food on the table for their families, and have kids especially. It tears me up to think that the kids in households are, they just don't get the same start that other kids do, and many of us are so blessed.
The same start or the same finish. If you think about, much later in life when it's time to go to college, what type of college, how they afford college, all of that depends on whether or not their family had the privilege of owning their home and building equity in that home.
Yeah, the whole generational wealth issue for sure, and how that impacts. One of the things, though, that I do think that we need to kind of change the thought process about came out in this article, and just how something was phrased. And it just kind of hit me a little bit wrong. It said, in households in the Rust Belt, the South, the Plain States, show more restraint in credit card spending. Well, I don't see it as, I mean, maybe there is some of that that's just restraint, but I don't think the impact on this is whether somebody wants to incur debt a good portion of the time. They're incurring debt to be able to survive. And so
Yeah.
that kind of hit me a little bit wrong when I read that. It's like, I don't think it's a matter of restraint a good percentage of the time. And that's just my personal opinion. I think a lot of it right now is survival.
Yeah, I agree with you. And I think in those places where, as you mentioned, population growth happened during the pandemic, which equaled, soaring home prices. This is all tied together, right? It's not a big surprise that those are also the places that we see larger credit card debt growth. But I agree with you. I don't think this is about personal responsibility and restraint. This is about survival.
Yeah. So it's like it is a unified thing though, because everywhere except for the state of New York, household debt has increased. And so it's an everywhere problem, but it is definitely exacerbated in some parts of the country more than others.
Yeah.
Let's talk about something that thanks, Mike. Mike popped a note in there with a link to an article from the Washington Post. Thanks for doing that, Mike. We'll pull that up here and look at it. Freddie Mac repurchases. Good news for people. We've had a number of lender members in our network that have been dealing with repurchases. I imagine that in your past you've dealt with some of those yourself. It does appear that Sandra Thompson, and I've always said this, and I am definitely a fan of hers, that because she has a mortgage background, is trying to listen to people and hear, what they're saying, but she is exploring repairing defective yet performing loans. She wants the industry to explore that in a different way than repurchase demands.
Bravo. Like that's taking action, right? I mean, I know at this point it's exploratory, it's not a decision yet, but that's taking action. And for me, I go right back to the same theme, which is this helps those that need the help the most too, right? If this relief on lenders provides the ability for lenders to help more people in the future, it really is a win-win. And I hope that this exploration ends positive results soon.
I think we all do. I think we all do it. Anybody that's been involved in the repurchase process, not only is it a big tap of time, but there's a huge expense involved in any repurchase. And we've heard from a lot of our members that, there are repurchases being generated on performing loans. Well, why are we doing that process? I mean, the question is really why. So hopefully it's something that we did talk with her in June when we were in her office. It's obviously that she's heard it from, obviously we're not going to take credit for that, but she's heard it from a lot of people. I'm sure that it's just a burden. And for some of our smaller lenders, one repurchase can, have a dramatic effect on their business, which equates to helping other people for sure. The other thing that I thought was really positive is that Freddie Mac issued a statement or not really issued a statement. I can't say that. They made a suggestion. So there was a hint out there, something dangled out there that maybe lenders with great records of not having a huge number of repurchases might just escape that. They called it the repurchase guillotine, which I thought was kind of funny. I mean, if we need another term, we need a funny one, right?
That's right.
So the repurchase.
We love an illustrative example in our business, right?
Yeah. It is a good one. So, we're 1 minute away from the bottom of the hour. So I want you to, you're such a great motivator in just the short period of time you've been in. I know that we knew each other before, but that you've been in the TMC family. Give us like give us the hope that you can always give people, because you're really good at that. So tell us what you're going to be doing there that is going to impact the people in your communities.
I am filled with hope. It's a rough time right now, but I think that what we see across the board in our industry is so many thought leaders, some for the first time stepping up, and it's shocking that they're stepping up for the first time because they have these in-depth abilities to portray messages and to inspire action and activity. And I'm inspired every day by sometimes simple things, just posts that I read on LinkedIn about mortgage industry professionals, many of them TMC members who have this passion to do the right thing for not only their companies and the longevity of our industry, but for individual originators who are out there on the streets trying to impact the lives of families every single day. So the thing that we plan to do at Southern Bancorp with our mortgage team is we're going to make our mortgage team look exactly like the communities we serve. Right now, over 80% of our mortgage team is female. Over half of them are members of minority communities, and those are the communities that we want to be a part of, that we want to be assisting in homeownership. And I know this is shared, across the board in such broad scale in our industry. It really is a source of pride and hope for me to see the adoption of so many wonderful policies and really modern strategies to increasing the American dream of homeownership. So I'll just finish with another shout out to the MBA awards, MBA D&I award recipients, Atlantic Bay and iEmergent. Just so proud to see that happen to such deserving organizations.
Absolutely. That seems like just the greatest way to end. Thank you, Jeremy. We love having you as part of our TMC family. I always love to talk with you. We could probably talk for hours about almost anything. So appreciate that as well.
Especially over a bourbon.
Especially over, which you need to come to Louisville. Louisville, March 23rd or 24th to 26th is our next conference. I hope that we will be sharing a bourbon and talking about all of the great things that have happened, not only in our industry, but for your group as well. So we appreciate having you with us today. Join us next week, everyone, at the same time. Appreciate y'all. Thanks.